Good morning, good afternoon, and good evening, everybody. Today's stock review comes at request of one of the commenters. I want to give a shout out to Buffalo for the idea. Thank you, Buffalo. He requested that I analyze ARM Holdings PLC, so that's what we're going to do today. ARM Holdings, ticker symbol ARM, is a semiconductor company, which means it's in the technology sector. Its current market cap is $68.14 billion, but that is fluctuating very quickly because ARM, if you did not know, just IPO'd about a week ago. And heading on over to the company's website, we can see that ARM focuses on computing. They design power efficient CPUs, and they've been doing so for 30 years. This company is not new by any means. You'll see in a little bit that they have products in just about every smartphone and many tablets and things like that in the world. So it's not a new company by any means, just a new IPO. Um, ARM is focused mostly on making sure that their CPUs are highly efficient and that they can offer a wide range of products for their customers. What is interesting about their products and their business model is that they only sell designs. They do not actually sell the physical product. So a company like Taiwan Semiconductors would buy the design of their CPUs from ARM, and then from there TSM can change those designs a little bit to make it unique. But ARM does sell these base designs. So 70% of the world's population uses ARM's based products. That's 250 billion chips that they've shipped to date in the last 30 years. 99% of all smartphones in the world run on ARM based products, and 50% of all chips have processors that are based on ARM. That's just how prevalent this company is. If you're interested in more information on the company, I found this really great article from Forbes called ARM IPO, What You Need to Know. It goes really in depth and explains the company really, really clearly. It tells you what is ARM's Holdings. They're known for making RISC machines, which stands for Reduced Instruction Set Computers. And it's a special type of architecture that allows CPUs to run and other things like that. It gives some stats about the company as a stock. It talks about how they make money selling their products to other manufacturers, and then it talks about their anchor investors. So these are companies that have given stakes to to ARM, and they include Alphabet, Samsung, Apple, Microsoft, Taiwan Semiconductor, Intel, and Nvidia. So these are some very, very, very large A-list tech companies. So ARM, needless to say, has been a very hyped IPO. And nowhere do we see this hype more than in its first day of trading, where ARM shares gained nearly 25% in what became the largest initial public offering since 2021. If I scroll down below, you'll see that the offering was initially priced at $51 by ARM's previous owner, SoftBank. It did open trading at $56, so already up about 10% when it opened trading on Thursday, and it did close at 63.59, which gave ARM a current market value of $68 billion. If I scroll down below, you will see that SoftBank, the previous owner of the company, and they still do own 90% of the company, they acquired ARM in 2016, and they decided to hold on to it, kind of grow the company a little bit, and then bring it public again at a profit. So ARM initially traded on the London Stock Exchange, and SoftBank acquired it, and now they've listed it in the American stock markets on the Nasdaq Stock Exchange. But not all has been rosy since the IPO. This Wall Street Journal headline here says ARM stock slides as post-IPO retreat continues. If we look down below, the shares finished down 4.5% today at $58, which is the lowest close to date. That is still $7 above the initial pricing of the stock, but it does show that current market sentiment around IPOs and especially highly priced companies, as we'll see soon, is a little bit more cautious than what some people might want to see, especially ARM, SoftBank, and others. So now that we've seen a little bit about what ARM is, what they make, and some recent news following its IPO, let's look at its balance sheet. A quick note, the company does not have 5 years of data. In many cases, it's approximately 3 years plus their most recent report. In some cases, it's even less than that. So this isn't going to be a super full or complete analysis. Unfortunately, there's just not enough public data for that, but we'll do with what we can. So to start with revenue, we can see that it has grown at 14.6% over the last 3 years, but much of that is in one jump, where from 2020 to 2021, ARM's revenues almost increased by 50%, and they've stayed fairly steady, slightly falling since then. We see the same pattern in annual gross profit. Again, large jump between 2020 and 2021, and a stagnation after that. EBITDA, slightly different story. There is again a large jump, almost actually over doubling from 2020 to 2021. And then instead of just leveling off, it has come down in the trailing 12 months. This is expected. I mean, the chip sector in general, semiconductors, have struggled with cyclicality that is natural for the business. So it's pretty in line with most other companies, but at the same time, it's not something that you want to see, especially for a company that's currently IPOing. ARM's bright spot is its margins. Its annual gross margin hovers in the low to mid 90%, and that's based on its business model. It doesn't create anything physical that it sells. It only creates blueprints and then sells those blueprints to others. That is an incredibly high margin business. Obviously, its margins go down through operating margins and things like that, but to have a 90% gross margin is really incredible. And I think that is where a lot of people get excited about this company. But we're going to follow that up with some bad news. The operating earnings has just not been looking good. The company, again, had a jump between 20 and 21, not very large, but it's been falling ever since, and it's been falling quite rapidly since then. So from 2020 to now, the company has lost 14.22% per year in annual operating earnings. Again, they're in the middle of a cyclical downturn. It's common for many chip companies. Look at like Intel, right? But it's still not something you want to see for a high-flying IPO. Shares outstanding obviously is going to stay the same. I've left them all as the same number, and that's just so that we have consistency later on. But the company IPO'd last week, so there's no change in shares. We can't expect much from the company here. ARM's cash and short-term investments have increased recently. That's good to see. The company in these down times is being smart and holding on to more cash in case they need it for later. I do like that move. They do not have any long-term debt either, again, which is great for the leverage of the company. They do have annual interest expenses, though. This is all in short-term debts, not long-term debt. And even though it looks like a massive rise, this is literally $2,000 to $64,000. It's essentially nothing for a company this size. ARM is free cash flow positive, but that's about all we can tell currently from the levered free cash flow chart. There's not much else we can gain from this. If we look at free cash flow per share, on the other hand, we do see a little bit more data, and it shows that 2020 was the peak of free cash flow. It has come down and is slowly regaining back to its current peak. This is pretty good to see with the company's earnings going down. It's nice to see that their free cash flow is still staying pretty strong. And ARM does not currently pay dividends, so we're just going to skip over that part. Which brings us to our valuation chart, which for such a new company means there's not going to be any data. But I do have a couple points here. This point was the last week's closing price, which is at $60.75. And if you look all the way down here, this is our fair value if we're at 15 times earnings, which is $5.85. We can see then that the current PE of the company is 155, which is exceptionally high. And I do see major issues with that, especially since the company is not currently growing earnings over time. Even if we're trying to be nice and give them a 30 times fair value PE, which would be slightly higher than their maximum growth rate of any of their metrics, revenue, gross profit, EBITDA, etc., the stock is still only worth $11. So that's a major issue for me, and should probably be an issue for you. That does not mean that this company will not see its share value go up, but for me personally, as a value investor, that's a major red flag. The company also does not have a projected growth rate yet. Analysts just haven't had time to analyze the company long enough. I do believe the company will probably grow at a rate faster than the overall market, but even then, I don't know that it's going to grow at anything close to 30 times, which is what I would assign it. A fair value PE of 32, and they have to be growing at 30% per year to have a fair value PE of 30. I think that's probably still too high for the companies, especially since they're so well established. This is a 30-year-old company, so they have very little major growth ahead of them unless there is far more demand for technology in the future. So to wrap up, what I like about ARM, number one is those juicy margins. We're talking 90 to 95% gross margins. That is excellent no matter how you look at it. Its products are literally everywhere, and I don't see that changing in the future. They are in almost every pocket in the world. So that's a major pro for this company, and we can assume that they'll keep that market dominance for a long time. And technology is an excellent tailwind for the company. It's only going to become a greater part of our lives. And with that, that means more semiconductors are needed. So more designs of semiconductors will be needed. And that's where ARM comes in. What I don't like, valuation, valuation, valuation. As a value investor, I cannot stand buying a company that has PEs in the hundreds. I believe it's setting yourself up for losing a lot of money, even if that comes in the future. But I'm a value investor, not necessarily a growth investor. So there are plenty of companies that have proven that you can buy it at a high valuation and it's just going to continue up because the earnings can keep up with that growth. We don't know much about ARM yet, so it is very possible that ARM could become an excellent growth story in the future. I don't like the company's performance has been cyclical. It is a cyclical industry, but even then, for something commanding such a high valuation, you would hope that it would have a little less cyclicality than it does. And then finally, a lot of unknowns about ARM. The company's only given us a few years of financial data, so we really don't know what its trajectory is. We don't know if 2020 was like this major positive aberration and the company really is not nearly as profitable as 2020 makes it look, or maybe like 2020 and 2021 were kind of below average and it's going to revert to the mean, in a positive way. We don't know. So the only thing we do know is that it creates a very important product. We don't really know where the value of the company that creates that product should lie. So that's, again, another negative for me, especially as someone who really, really wants to know what the value of a company is before I buy. So for me personally, I will not be purchasing ARM. It just doesn't fit with my investment philosophy. But if you're into growth companies, this is a company that offers a ton of potential. I hope you guys enjoyed that review of ARM. And please let me know if there is any other stocks in the future that you would like me to look at. Otherwise, I hope you all have a great day. Thanks.